Welcome to The Explainer. Today, we're going to do something pretty cool. We're going to unpack what actually happens when a company decides to go public. And we'll be doing it through the lens of a really interesting case study, a private jet company called Fly SBS Aviation. We're going to dig right into their official documents to see how this very private business opens its doors to the public.
So let me ask you something. Have you ever dreamed of owning a slice of a private jet company? I mean, it sounds like pure fantasy, doesn't it? But when a company like this goes public, that dream actually gets a little closer to reality for investors. Let's explore that exact moment a super private world decides to step into the public spotlight.
Okay, so first things first. Before we can really get into Fly SBS, we need to get our heads around the big idea that makes it all possible, the IPO.
At the very heart of this story is the IPO, which stands for Initial Public Offering. The best way to think about it is like this. Imagine a company is a pie, a whole pie that's privately owned. Well, an IPO is when they decide to slice up that pie and sell those slices to you, me, anyone in the public. And why would they do that? To get a whole lot of cash to build a much, much bigger oven. They're trading a piece of ownership for capital to really supercharge their growth.
So you're probably wondering, how do we know all this inside information? Well, it all comes from this one key document, the Red Herring Prospectus, or RHP for short. Any company that wants to go public has to file one with regulators, like SEBI here in India. You can think of it as the official rulebook, the company's tell-all guide. It breaks down everything, their business, their money, and maybe most importantly, all the potential risks.
All right, with that foundation laid, let's get to the star of our show today, Fly SBS Aviation. Their perspectives gives us this really unique peek behind the curtain of the private air charter world.
You know, you don't have to look any further than the company's own words to get what they're all about. This is not your average airline. As they put it, their business is for an elite class of customers. The entire game for them is about exclusivity, luxury, and, well, a level of service most of us can only imagine.
Now, when you dig into their operations, you find something pretty interesting about how they manage their fleet. They use two models. There's a wet lease where you get the plane, the crew, the whole shebang, and then there's a dry lease where you just rent the plane itself. And here's the key takeaway from their documents. They're strategically shifting more towards the dry lease model. Why? Because it gives them way more control and flexibility over their operations. And for a company that wants to grow fast, that flexibility is absolutely crucial.
And all of this leads us to the biggest question in any IPO, right? The multi-million-dollar question, quite literally, why now? So let's follow the money and see exactly what Fly SBS is planning to do with all that capital. Here's the magic number. The company is putting out more than 4.5 million new shares for sale. And this is really important. The document specifies this is a fresh issue. That means this isn't about early backers or owners cashing out. Every single rupee raised from selling these shares is going straight back into the company's fuel tank, so to speak, to fund what comes next. So where's all that cash going? Well, they're not being shy about it. The plan is laser-focused on one thing: pure, ambitious growth. You can see the vast majority of the money they raise is going towards buying 6 new aircraft. It's a classic expansion play. They're asking the public for money so they can dramatically scale up their fleets and their business.
And you won't find these shares on the main stock exchange. Not yet anyway. They'll be trading on the NSE Emerge platform. This is a special segment of India's national stock exchange, and it's designed specifically to help promising small and medium-sized companies get access to public funds. It's basically the perfect launchpad for a company just like this one.
Now, an ambitious plan is one thing, but does the company have the financial track record to actually back it up? Let's peel back the curtain and look at the numbers. They really do tell a story.
Wow, okay, just look at this chart. The revenue growth is, well, it's explosive. In just a couple of years, their total income has shot up by more than 5 times. This isn't just a gentle upward trend. This is a massive surge in demand for what they do, and it's the kind of momentum they're hoping to ride with this IPO.
But here's the really crucial part. That incredible top-line revenue growth, it's not just for show. It is flowing directly down to the bottom line. Their actual profit has jumped by more than 8 times in that same period. Now, what that tells an investor is that their business model seems to be working efficiently. As they're getting bigger, they're also getting significantly more profitable.
All right, but a prospectus isn't just a highlight reel. It can't be. The company is legally required to tell you the good, the bad, and the ugly. So let's turn the page and look at the challenges and the risks that they themselves have put on the table.
The company is very clear about the hurdles. Some are just part of the aviation business, like wild swings in fuel prices, and depending on just a few suppliers for critical parts. Others are specific to their model, like being so dependent on a very small niche group of clients. And then you have the big structural stuff, heavy government regulation, and of course the simple fact that these shares have never been traded before. There's no history. It's a real dose of reality. And that leaves us to what might just be the single most important disclaimer in this entire document. The company has to state in no uncertain terms that the IPO price, it should not be seen as a guarantee of what the stock will be worth later. Basically, they're saying the price we start at is just that, a starting price. Once it's trading on the open market, all bets are off. It's a whole new ballgame.
So let's zoom out and pull all of these different threads together. When you put the exciting opportunity on one side of the scale and all these risks on the other, what's the big picture? At the end of the day, it really boils down to this fundamental trade-off. On one hand, the opportunity is to get in on a high-growth company in a market that is absolutely booming. On the other hand, the risk is a business with incredibly high costs that's highly regulated and has zero public track record. It is the textbook definition of a high-risk, high-reward scenario.
Which leaves us with a final, much bigger question to chew on. As this super exclusive world of private jets and luxury travel becomes something you can buy on a stock exchange, are we watching luxury itself turn into just another commodity? Just another ticker symbol flashing on a screen? Something to think about. Thanks for joining The Explainer.